Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. Disclaimer time. This is where I tell everyone to lighten up. It's just a podcast. Trading is like that roller coaster at the amusement park. Thrilling, unpredictable, and potentially stomach-churning. What works for one person might leave another clutching their hat in the wind. Our hosts and guests, they're awesome, knowledgeable, full of insights, but we're not financial advisors. So don't rush to make any investment decisions based solely on our banter. Always consult with a professional or do your own research. Plus, let's face it, we like to have fun, laugh, enjoy the trading ride together. It's all in the name of good podcasting fun. So remember, take it easy, don't bet the farm, and keep your seatbelts on at all times. Thank you for listening. Yes, okay, we're going. Hello, everybody. Welcome back to the China Shop, home of the Band of Traders podcast, aka the Steamboat Willie Show. I'm your host, Kyle. Tonight, we've got Vanta Trading co-founders, Mr. Banks and Baba Yaga. Shout out to Purdue, who's hopefully enjoying date night and not plowing snow right now. On tonight's show, we'll be discussing trading out of a hole, followed by the differences between trading during bearish and bullish markets. After that, we'll look at our past week in the good, the bad, and the ugly segment before wrapping up some new bold predictions. Before we recap the most recent predictions, let's get some self-promotion stuff out of the way. So on Monday, I'll be recording with Retail Capital again for Thursday's release. You follow us on Twitter at FinancialInept1. You can join the Discord if you want to get updated when episodes drop, or you can even listen in live on these Friday recordings. And shameless website plug, go to bandoftraderspodcast.com where you can browse the guest directory and check out all the great deals and discounts we've collected. Banks, Baba, you guys got anything new to share?
Banks, talk. Say good stuff.
Yeah, we're finalizing kind of the step 2 of our town hall from last month. Going to put more of a course type of feel out there of, kind of step by step, how we kind of look at the market, some different aspects that we kind of look at just on a daily basis. Yeah. And I think it's, on our side, it's just, developing and kind of, growing our content. So that's kind of the main push forward in 2024.
I love that. And Baba, your trade review that you did, was that yesterday? Man, that thing was awesome. I hope you do some more of those.
I actually just finished recording another one, oddly enough, with the microphone muted the whole time.
Oh, no.
So,
Oh, no.
Yeah, 100%, man. Dude, 100%. So I've got to redo that after we're finished here tonight. But yeah, I'm going to try to be more disciplined in that because I think it's helpful. I think it's helpful for folks. And so, yeah.
Also, I want to point out, too, that Trading in the Shop, Baba and Banks join us every other Friday. So today was their day to join us in the free side. And, man, I think you guys crushed it today. It was pretty awesome trading with you today.
Well, thanks. I felt like, it's Friday, so I left a lot on the table, but that's pretty normal for a Friday.
Right.
But I was really happy just smack, and being done, dude.
Yep, that's always the dream on a Friday, isn't it?
Dude, I think it was before 10 a.m., so yeah, that is the dream.
Right. We'll make sure we have all those links in the episode description, so you check them out if you want to support the show and the panelists. But for now, let's. Does anybody remember their predictions from the last time we made them? I think it's getting a little convoluted now.
They were all bad.
Mine was horrible, bro. I think mine was like the market will trade lower than Monday's, or the low of this week will trade below that before we trade higher than this week or something like that. Whatever week it was, and that obviously didn't happen.
We just went straight up.
I don't remember which week it was, but I know it didn't happen.
Yeah, no.
I think that was what happened. Yeah, it was straight up.
Yeah.
I know I wanted NQ all-time highs, but I pulled my prediction up a week and ended up being a week early. Purdue, though, I think nailed his. He had ES at 4,700 before end of year.
I think I was a day short on mine.
You were good up until Friday, wasn't it?
Yeah.
Wasn't your kid would do a full week of school?
Yep. And when I left for work, everything was good. And when she woke up, she had pink eye.
Oh God,
dude, what the heck, man?
Never ends.
I don't know, man. She hasn't been to a full week of school till before Thanksgiving, I don't think.
Whose nasty kid gave your kid pink eye? That's what I want to know.
That's probably my other daughter.
No. I'll bleep that out.
No, you can keep it in. It's all right.
Okay, so basically, if I'm understanding this right, the only person who got the prediction right isn't here with us, right?
Yes. I believe that you are correct.
All right. Yeah, then fuck this segment. Let's move on and do the topic.
I like it.
All right, so what was that? I think it was Wednesday or Thursday. There was a post by one of the members in the Discord kind of sharing like a bit of a struggle that he had where he traded out of a hole, ended up green, but then continued pressing it, and then ended up, I think, taking a bigger loss than he'd expected. This is something that kind of resonated with me because that was sort of the experience I was having on Wednesday, where it started out really terrible. I clawed my way back to break even, probably taking a bunch of trades I shouldn't have been taking. But I was at least able to recognize that I was lucky to get to where I was, and I stopped at that point. Probably would have been better off if I would have stopped maybe, I don't know, after the third wrong trade rather than taking like 3 or 4 more after that point. But I'm curious how you guys kind of approach that because, there's a fine line between fighting for an entry that you believe in and stubbornly clinging to an idea that's not working.
Boy, isn't that line fine?
Right?
I don't know, Banks, you should talk about that at least first, I think.
Yeah, so I like going back in the past, I was always really good at digging out of a hole. But there is a fine line of when to dig out and when not to. And I think a lot of the times, like if you're in a trade and you're seeing it and it's just, there's those days where you're just going to have bad days. And it's a matter of just, knowing that you're just wrong on those days. And then there's a matter of like, you get into a trade well positioned and, you might take a stop or two, but your idea is right. And there's a fine line between that. But I, like in the past, I was always pretty good about digging out of holes and getting to that point of break even or even maybe even a little bit up. But that is not like ideally that is not the way you should be trading. And I would say, you can get lucky like every now and then and hit one of those trades and get back to break even. But I would say the vast majority of time when you try to dig, it typically doesn't work. I would say most of the times you probably take a max loss or whatever on the day. But, at the same time, you could kind of view this the other way too, which would be a good second question is, when you're up on the day and you go to push and you give it all back plus some.
See, I don't have that problem because I have a hard time pressing when I have green. As soon as I've had a green trade, then I'm like so fearful of giving it back that I'm just afraid to put risk on anymore at that point. I
would say that you are in the few, because the idea of like, well, it's kind of house money a little bit. I think a lot of people fall into that trap, and you could go through any kind of wall or Discord or whatever on Twitter, and you see that daily. You see people that will go up $700-800, and then all of a sudden be at a max loss day trying to grind for a certain P&L or something along those lines. But it is a very fine line, and it's a very hard thing to do. My tip would be, and this is just something that like I realized with, working with Baba and kind of working with the group here is like a small red day is a good thing because like in my past, my red days were always large red days. It was either like I would have consecutive green days and then a max loss day. And along the lines in those all green days were a couple of days where I had to dig and got it back to break even or a couple $100 up or something along those lines, which, that'll be fine. But when you have a max loss day that gets compounded in there, it takes a week to get back, what you would lose on that max loss day or whatever it is. And I just think, it's a very tough thing to do. I mean, it's all mental when it comes to it. But, my tip would be to just know or to write down what you feel in the moment. And I think that's a big thing, the feeling aspect of it, because when you're looking at this and you're looking at candles, looking at the charts, you can tell when you get tilted. You can tell when you get certain feelings along those lines. But unless you recognize and write that down or just memorize it, when those feelings come up, that'll never change if you don't recognize it.
God, I really want to talk about my bad, because this is kind of like right on the money with what you're saying right here. The trades that I did on Thursday, like the first 3 that I took were not great. I was jumping in early, and the one that ended up hitting to win, that ended up making my day and probably my week, I'd say. Like if that trade hadn't gone my way, I would have been right back where I was Wednesday, probably trying to fight and dig another hole out. And that's what I wrote in my notes. Like this trade worked out, but I was close to having another breakdown.
Yeah, and it's such a thin line on those type of days. Because typically, like if you're trying to I would say most of those days are not where we're just range bound. I would say most of the days that occurs is when you're kind of a directional based. And I would say most of those days you're trying to fade the move that's currently in play. And that's the thing. You're going to be wrong until you're right.
Right. Yeah.
Because
exactly.
eventually it's going to turn and it's going to work. But it's a matter of when you're early on those days and you're early and take a couple stops. I mean, there's not enough capital in, I would say in most people's trading accounts to, survive that type of day.
Yep.
And I think that's where a lot of people get stuck is those directional days when you miss the initial move. It's very hard to walk away thinking, well, we just went, 50 points on ES. We got to turn around soon. Well, we don't really have to.
Yeah.
I mean, we could go another 50.
Right.
And it's just a matter of, and I think the feeling aspect of trading gets overplayed quite a bit.
How do you mean?
Let me rephrase it. I would say not overplayed, overlooked is a better way of putting it. Yeah. The feeling piece of not recognizing like what you're feeling in the moment can be very detrimental because like in trading that I'm in now, like a win or a loss, I don't really feel anything different, to be completely honest. But when I start to feel a certain way, I know that the day is going to be bad. And those are the days that I just walk away.
Yeah.
And it's just a matter of you get bottom ticked on something that works, you have a trade that's profitable that comes back and hits you out at break even without your take profit getting hit. It's just those things that you get tilted so easily in the market when stuff doesn't go your way, to where it's very easy to be like, well, I'm going to get right back in this trade, which most of the time does not work. That area that you were in initially was a good area typically. And if it didn't go, then there's a reason why.
Right. Right. That's such a good point too. Like the building the awareness, I think, of what things set you off. Like the only way you're going to ever start to recognize the symptoms before it turns into something dangerous is if you spend the time recognizing it when it does happen. So
yeah, absolutely.
It's almost like you can do a rich reframe, right? Like when you have one of these types of days, like where you struggle, or when you don't do what you're supposed to do, or when you give us some stuff back, like to take the time to actually analyze what happened there, so that way you could try to prevent it next time or do better at stopping it next time sooner.
Yes. Yep. Absolutely.
Baba, what do you think?
I mean, yeah, I agree with, the bulk of what Banks has said for sure. I think keeping up with how you feel, not just on bad days or tough days, but just even when you're overly excited or exuberant, what makes you feel like a boss, and just being aware that any of those extremes are probably where you're vulnerable to doing something that you would look back on later in a moment of clarity and be like, what was I doing there? Like, why would I take that trade? And that was a question I had for you is whatever the last trade was of the other day that you were talking about, looking back at that trade, like say today or later that day or the next day, like if that trade is a trade that you would still take, like you look at it and go, yeah, that's a setup in an area. Everything about that, it checks my boxes,
That was the
then
best trade I think I took that whole day. I think the ones
yeah.
before that I was trying to bottom pick a little bit.
Yeah, so if I would say a couple things. What I think used to happen to banks actually was, and we haven't talked much about this, but this is my assumption. I don't take him for a flippant trade entry person. Between the two of us, I'm going to be more likely to give more shots during a day than him probably. And what's hilarious is he used to be a freaking scalper extraordinaire, like taking a million trades every day.
Right.
So I'm probably going to be a little more aggressive on entries, and he's probably going to be a little more patient. But with regard to taking entries or whatever, like that trade, whatever was there before that, you're chomping at the bit. And I think this used to happen to banks. Then you kind of realize like, oh man, I've kind of made a mess here. Like it's time to focus in and capitalize on the next great opportunity because I'm firing a bunch of shots that aren't yielding anything. And I think then you focus up sometimes and you take the next great setup because of the obvious and apparent damage that you've done. And so then you take a couple of great trades because you're so focused, like you're honed in. It's got your attention. Oh yeah, I'm flat on the day. Oh, I'll give it a shot here. Oh, give it a shot there. Oh, give it a shot there. Well, you just lost 100 points. All right, hold on, everybody.
Down.
Slow down.
Yeah.
We gotta make 100 points here. We're not losing hundreds of points. We're making hundreds of points. I think that happened would be a thing that I would say like it's almost like you change it to another gear. The trick is sometimes you don't find that gear. You run out of mental capital. Decision fatigue sets in. You can't kind of lock in and make it happen. And that's those days that get out of hand. And so what I think Banks has done a great job at is just respecting the damage that you can create and being extremely selective of where he's even going to throw his chips in the table on. And so for you in that scenario, I think you do a fantastic job of identifying opportunities like today. Although it might be frustrating to look back on at what was left on the table, that those spots, like I said on Twitter, I mean, those are and were the kind of spots you want to be doing business. So take nothing but positives away from that because you were locked in today.
Yeah,
you might not have been trigger pulling, but you were locked in on the exact right spot. So I think that's where the respect for the market and the mess that you can make is it's something not to be afraid of, but it's something to keep at the forefront because we're stepping into the battlefield literally almost, not literally, but it is a very competitive environment and we got to be ready to execute, but we've got to be very focused and pointed.
You can't be all offense. You got to be defensive.
Yeah.
Too.
Like pointed in those places, like we're very at attention and pointed up on those places that matter. And, I think that's key. Like if I look back at days where I haven't performed as well, one stands out above all the rest. It was a Friday. It was a Friday that I was maybe back from vacation early. Wasn't planning to even trade. Kind of wasn't even thinking about the fact that it was a Friday. You remember this day?
Oh, yeah, I do. I think we had to remind you it was a Friday.
Yeah, dude, I'm over here just playing, like, slinging lots around, whatever. I'd had a unexpected banger trade the day before. I felt way ahead, like, just emotionally. I was like, I'm so far ahead of the game this week, I wasn't even going to trade, and I killed it yesterday on a great setup. And, yeah, I'm sitting there taking trades, a little profit, take a break even stop, take a stop, get a phone call. I'm over here with the phone up to one ear, muted, you guys could still see everything happening on the screen, and I'm just like still steady trading, talking on the phone.
Yeah.
And I think like Purdue even like said something in chat or something like, what the freak, like, or maybe later, like, what are you doing? It's funny how we can just like drift off in a couple moments and be like, what am I, and even that still happened. I mean, that happened to me like, I don't know, it was like a month ago or something.
Yeah, it wasn't
At
that
1st
long
of
ago.
December.
It's kind of
So
helpful though, having somebody that can point those things out to you in those moments, because sometimes they do. You just slip into an old habit or an old mindset or mentality, and it can happen without you even noticing.
Yeah, actually, Mike Ross sent me a text during that time, at that day, and was like, and that's someone that I mean, he was trading some before, but like we spent a lot of time. I've spent a lot of time with him, helping. I feel like contributing to his journey and helping him advance, progress and make progress. And he like sent me a message, almost like, "What's going on?" And I was like, "I don't know what's going on. What am I doing right? It's a Friday. What am I doing?" So. Yeah, I would say though, like we will focus up sometimes, and that's what those fight back days, look back at them and go, man, I was down this much, and then I got back to break even. That's so awesome. But really focusing on like looking back at those trades in a cool headed moment, you would have probably only taken the one or two good trades of the day anyways.
Yep.
In retrospect. So it's how to kind of focus up on that side of things, I think is kind of key.
And to be completely honest, like Friday, I'm not even upset about missing the 3 trades that I missed today. I approached today with the mindset of I'm not going to let what happened Wednesday happen today. And so I wasn't going to take anything unless all the stars aligned. And that didn't happen. And I'm perfectly happy with that.
Yeah. I just love finishing Fridays early and Fridays being stress free. And I debated this morning trading that post news after the 8:30 news.
Mm-hmm.
The way that set up was just so clean down there that I was sitting here watching. I had the opportunity. I knew it was a Friday, blah blah blah, but like it was a really good spot, and it really set up well. And I shortchanged even that trade because I could have held that entry. Whatever, it was a good entry. I could have held it all day. But it's again, I was looking at that even like a Friday, like, oh, let me just grab the most reasonable chunk of points out of this area I can in alignment with my process, but as conservative as I can be without like being a straight up just trading my P&L. So I think that kind of set today up to be, fairly laid back for me, which is nice. Like I love an easy Friday, man.
Yep.
I love an easy Friday.
Any other thoughts on trading out of holes or any other words of wisdom before we move on to the next one here?
One thing that comes to mind is just goals and like where you're going with this as a trader, whoever you may be, you, us, a listener, that those moments where you really unwind, on a day. And then you think, okay, I'm going to get all this back because you know how long it's going to take to get back under normal circumstances. So you get, if you don't go into lockup mode and like get real focused and do something great, you go into like desperation mode where you throw on more size in bad spots and you just try to wish something into existence. And the thing I would say is like, again, writing down the emotions you feel is key. And like, there's some real specific triggers for me I'm so aware of. Like when and I've mentioned them many times as we're, been trading together. I know like what they are. I have them written down over here, and I know what they feel like at the very early stages, and I just dodge them at all costs. So I think that's a key part. And we've belabored that point, and both of us have. But the other piece is the goals that you have. If you're trading a cash account, say a smaller balance, and you've only got a little bit left before you have to save some more to do another run or whatever the goals you have that are set out in front of you. When you go into one of those type of days, try to dig out of a hole, get reckless, make a huge mess. The thought is, well, if I just press it, I can get it all back. The reality is, percentage wise, most likely what you're going to do is you're going to take those goals and whatever distance you are away from them, you're just pushing that a week or 2 or 3 weeks down the line. And that's been a motivating thought for me is just the things that I have, the goals that I have, and the things that I'm trying to achieve and realizing and trying to continue to realize, that weakness of it's almost like forfeiting it for that day, which then forfeits them out another week or another month. If you're trying to fund a small cash account and you blow it all to smash, you have to work some overtime or work extra job or whatever, Uber Eats, to save up money and then make another run. You push that goal way out. Just take the L when you realize you're out of control, or when you realize you don't have it that day and you make a few bad trades and you're like, man, what am I doing? Cut it off. And then when you gather yourself, go back and review, like, were those entries qualified? Did I have precedent for being able to take that entry? If that's true, then that day just wasn't your day. If that's not true, then you were trading in an emotional, reckless kind of way. I just think that's so important, like not shoving those goals further down the road because of your recklessness, which I think ultimately is it's a little bit of laziness. Not journaling those things, not keeping up with it, not learning from those things. I just think it's super important. The last thing I'll say about that, and then I'll shut up talking about it, is if you see on the World Wide Web, I saw a video today on Twitter, and we'll leave everyone anonymous, and I'm not calling anyone out, and I don't want any drama, and I'm not calling any names or anything like that. And I think everyone can do what they want. It's a free country. But if you see someone slinging like 40 lots or more, 30 lots or more of NQ, and then kind of like bragging about what they were able to scalp with that or take with that, just know that, like, of the successful traders I know, and for whatever it's worth for me saying it, like, that's not how most of those guys do it. And I don't think that there's a long-term success in that unless you have tested that and you have the pockets to make that happen, or you have the money to fund the resets. If you're trading a funded account or a prop account or whatever, like, if you're going to go all in like that and swing for the fences, just know that, like, if you're trying to game the system, that's fine. But, like, it's not the most prudent goal to have, to be able to trade like that.
It doesn't sound very sustainable.
Yeah, I don't think it is. And I think that doesn't really help the developing trader when they see things like that. So don't let those kind of things creep in on those days that are tough and think, well, I can actually take 15 contracts in this account, or I can actually take 30 contracts in this account. And if I just get 5 points on 30, that'll clean up this whole mess. You're like, yeah, it's not going to clean it up. You're going to blow that thing to smash.
I'd say, too, that whenever you do actually manage to dig out of those holes, that also pushes you back from your goals because you're reinforcing bad behaviors.
Copy that.
Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is to just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. All right, let's move on to the next one here. This is something that Baba, I think you mentioned it on Voice at the start of the week. At some point, you'd cautioned us that bearish runs, the pullbacks that happen during like a bearish week or a bearish stretch, can be a lot more. What was the phrase you used? I think you said they could be a lot more. They could run a lot deeper than anybody would reasonably expect.
Yeah, for sure.
I'd kind of like to get your thoughts more on that. Like, how do the mechanics change when, like, we're talking about the difference between a bearish stretch and a bullish stretch?
I think it's true for both stretches, to some extent. But I think people get roped into the short side trade and put on exposure in places that rotation wise are not reasonable. And then that gets exposed. So we traded the long side of the market yesterday and today, and the market closed down yesterday and flat today.
Mm-hmm.
Now we're trading the morning sessions, so we trade what we have. And the upside moves were great. They were relatively easy to get positioned for. We had structural and contextual reasons to take the trades we had, all of that. So I think I said it almost every day that we just need to be mindful of where we are in the rotation. That generally, without a catalytic event, the market, even in corrective phases, doesn't just plummet. It almost takes a catalyst for that to happen.
Mm-hmm.
The natural flow of most of the flows that come into the market are, generally speaking, positive flows. If you think about a retirement account, that is a massive amount of what's being put into the market on a regular basis. All of those are long side trades. I don't know many retirement accounts of people saying, "Yeah, I'm selling another 500 NQ today."
Right.
My company matches 3%. We're selling short. I've got 6% of my annual revenue. I keep selling it. Like,
Yeah, I don't think
people
you
are
even can.
people. No, yeah, man. It's pop by it. There's just. I think about it like the market, generally speaking, is like a beach ball, and it takes some effort for it to go down. It typically will kind of stay afloat, and then occasionally or often will kind of pop out of the water. And so it almost takes, and whether you love it or not, like it almost takes some effort for those things to really continue lower.
Mm-hmm.
You can look at options positions play a role in that. Zero DTE stuff plays a role in that. The flows from hedging play a role in that. But all of that to say that, like, there are days where it's just bearish flows and you roll with it, and you have all the signs there, and it's a short day, and that's fine. Like, we take shorts. A lot of shorts have been taken over the last year. A lot of longs have been taken over the last year, last month. I mean, whatever. But to me, the dangerous trade is oftentimes the close proximity short.
What do you mean by that?
So, like, 4-hour rotations right now are roughly 200 points in the NQ. Okay, so from a swing high that I would qualify that matters to a swing low that I would qualify that matters over a given number of days, that rotation from a swing high to a swing low is about 200 points ish.
Mm-hmm.
Okay. So if we're down from the prior recent believable swing high more than 250 points, I just don't think that's where I want to go wide open into a short off the open.
Gotcha.
Yeah.
Like
in the town hall we did a while back, where we talked to, it's been a while now, where we talked about areas that have potential versus areas where we know what's going to happen. I don't know that the market's not going to go down 250 more points before a swing high is created.
Mm-hmm.
But I know that there's potential for it to attempt to find a high before continuing the next leg of 200 points down. And so typically I'm looking at the overnight rotation, where we are, all of that kind of stuff. But even on a bigger level, like, I just don't like looking at a balance chart, TPO chart, daily chart, 4-hour chart, and seeing us being at the heart of swing lows and thinking like, yeah, this is where I'm going to pile in. I mean, we're short-term traders. So if you're looking at the next 6 hours, which is kind of our window, and really like 3 hours, like, we're looking to capitalize on the activity the next hour and a half to 2 hours. Sure, there's definitely short opportunities. I just don't like to see folks just get blown out shorting every swing high. And I think that's what we get like lulled into with that. I was looking back at the video we did today, talking through, I actually recorded way more today than I thought. And so that just the way we created the low, like just the doldrum, like, muted push up, grindy, down.
Mm-hmm.
Yeah, those trades all worked until they didn't today, when everyone just got, not everyone, but yesterday and today,
Right.
big rips to the upside. So yeah, that's really it. Like I've been burned more trying to short those kind of moves in years past, and I'm just maybe I got burned, enough times that I was like, man, freak this. Like,
Stop putting my hand on the stove.
yeah, like I'll take shorts. Don't get me wrong. You guys have traded with me long enough. Like I've traded the downside. That's fine. But I'm gonna need. I'm gonna be more cautious to do that when I feel like we're on the bottom end of rotations, and that was really the point of my thing. Looking at the daily charts, looking at 4-hour charts, like. And let's know that when this springs, don't be the first one to try to short it. Like, let's let them lose something that matters after failing to gain something that matters. And then we can look for that downside rotation. But oftentimes we don't want to be patient for that. We want to be, I want to short it from the very tippy top. I want to
Our
be.
emotions kick in. We start to feel like if we don't get it now, we're never going to get it, or the opportunity is going to be gone. And that's just not the case. But I think.
No, didn't we say, well, I was going to ask you, didn't we also say, we talked about this before, and we talked about that idea of let's let someone else prove it to us, and then let's just join in with that. Like, let's not be the guy at the very top or the very bottom if we can help it. Let's let them lose or gain something, and then let's join in on that.
I was actually reflecting on that today, and I was thinking about a pattern that's starting to show up that becomes more and more apparent to me the more I spend time in front of the screens, and that's the big red delta sell-off after a strong up move that doesn't take anything and that doesn't continue on the next candle. And like before, like when I would see like sellers are stepping in, like when I first started on my journey, I was like, oh, now's the time to join them. And then you get your head ripped off because it rips up and reverses on you. But sometimes they'd work out because sometimes they do continue. And then as I was thinking about some of the opportunities we're looking at today and yesterday and seeing those patterns again, and now I'm starting to salivate at the idea that this guy's getting over, in front of his skis a little bit and looks like he might be ready to fall over. But that's still the wrong attitude, because either of those possibilities are going to happen or could still happen. It hasn't been proven yet until you see the move start to move one way or the other. And the much better trade, rather than trying to guess whether this guy is, he really does have the biggest salami in the room that he's slapped on the table, which is basically what he's doing. He's saying, here I am, but can you beat me? Rather than waiting to see if somebody steps in and puts him in his place. Why not just wait until that's resolved, and then you can decide what to do with it.
Yeah. And then laying, I think we talked about this today, but just a strategic piece while we're on this is like, when you see that aggressive sell come through and you see this, maybe it's a bunch of negative delta, just and it's a very sharp, aggressive move. Banks talks about this all the time. Like, what did they accomplish there? And that's really the question. It's not how far did we go? It's not how violent was it, so much as it's what was accomplished. And so if you notice today and yesterday, and not to like toot my own horn or whatever, like we had certain spots where we were like, okay, if we're back in this area, if even if we fall below, like if we get back up in this area, then I can bid from here. Or like yesterday when we broke below like a spot I wanted to bid from based on everything I had, I was like, well, let's go ahead and let them not just get above this. Let's get here, and then we'll use that as our next springboard higher. And like trusting your work enough to lean into that is something, again, like trying to narrow that gap between the work that we do and the performance that we're able to procure on a daily basis or realize. That's something I've really been focused on. I was like, okay, if this area really matters to me, even if it's 30 points up from where, the open is or whatever, like if this area really matters and there is something going on here, then it's fine for me to bid that. And I'm going to lean into the work when it says that that's the case. And that's really what the last 2 days, part of what has been fun for me about that is just really leading into the process of saying, hey, if we're back above whatever it was today, like in that 62 to 72 spot, like I'm okay to be on the bid there. Well, yeah, they knifed through it really hard. And then what do? We recovered right back to it.
Yep.
It's like, all right, well, we get back on the bid. Like, I'm cool with that. So, yeah, I think that's a great point. Just don't get – it's like an advertisement is the way I think of it. It's like, hey, everybody, check this out. And everyone's like, nah, I'm not interested.
Right.
When we see that, like, flashy ad, we just dropped 15 points or 20 points. that's a flashy ad. Is there any meat in that bone? And then right back, or the same thing. Like we see that to the upside as well. I don't want to just dog on short sellers. Like we see that to the upside, really strong move up. And then it's like a big ad, like everybody look at this.
We're going streaking.
And then, and then, here come campus police and everybody's gone, and you're standing out there like, here I am, guys.
Wife's picking you up in the car in the middle of the street.
Yeah, someone come save me. So,
before we move too far past this, Banks, I kind of want to get your thoughts on kind of what you're talking about, Baba, with the average rotations. Because kind of like the more I think about it with like liquidity and like the way you see the markets, it kind of makes sense then that it's going to be a lot harder for the markets to move much further than what those averages are, because now you're counting on everyone to be holding their positions who initiated it. Like those bounces come when those guys collect their profits, right?
Yeah. And sometimes, I would say the market, to me, the way that I look at it, we tend to go from liquidity to liquidity.
Mm-hmm.
And what I mean by that is, taking swing highs, taking swing lows, so that the point that Baba made of, what did we accomplish, or, something along those lines, is such a key thing in the way that I look at it, because a move could go 200 points, but if you don't take anything, they didn't gain anything on that move. So in essence, if you fail going into that swing high, and you see this quite a bit where you have equal highs or double tops or whatever you want to call it, where we don't accomplish anything. And it's not just sellers, not buyers. It's on both sides. I mean, it's just, It's a failure. It's a failure on both sides to take what the ultimate goal was.
Mm-hmm.
And without,
and you go from, you go from goal to goal, right?
Yeah.
I think that's a real light bulb moment. And you talk about this a lot. Like, okay, today we took the Asia high on the way up. We took the Euro high on the way up. And then we got to that 80 to 90 area, which we talked about that spot being super key, because that's where that like effective double top was from the Euro high of night before last, and then yesterday's morning AM session high. They came within like a few points of each other between like 83 and 85 on NQ. And so then today, okay, we cleared Asia highs, we cleared Euro highs, we cleaned up some 30-minute swing highs and other stuff. But once we got up there, what was special about that? It was the next place that mattered. Like to the work that we do, that was where nothing we've done yet all day at this point matters. The next thing is swinging through that. And if buyers lose there, then we're rotating back to micro session accumulation midpoint, or we're gunning for liquidity, either internal or external, from the micro session that we're in, or the quarter that we're in, or whatever. It's like you only win so long. Okay, we won here, we won here, we won here. Well, there's another place up here is just as important to win. As soon as we lose, I say we, like as soon as the market loses steam, the liquidity pull isn't as strong, then like, okay, that's it. It's time to go refuel.
Yep. No, I 100% agree with that. It's like a 1 hour, 4 hour swing high or something along those lines. I think a lot more people look at those type of things. Like we look and we break it down. I mean, you can look at the town hall and stuff, but like we break it down into smaller segments into, our 6 hour session, Asia, Euro, the AM, PM. And those just mean way more to me. Which in essence, like a lot of those end up being hourly or 4 hour swing highs.
Mm-hmm.
And that's one thing that I've, noticed throughout trading is like, I would watch those hourly swing highs. Well, why do some matter more than others?
Right.
And I think that's where it, finally clicked, where it's like, well, this on the ultimate goal of what needs to be taken is just step one. And it's just a matter of like, laying out that plan to where if they take this, yeah, it's an accomplishment, but it's not like a change of anything, per se. Like if you take a 5-minute swing high, yeah, like it could be important, but most likely it's not. Mm-hmm. Like when you look at the grand scheme of things. But when you start taking like session highs, when you start taking like daily highs and stuff along those lines, it means a lot more because you're accomplishing something from the side that you're either a buyer or a seller. So when you start taking like these external, liquidity spots, it just means so much more in the sense of what liquidity is actually trying to target.
Also, what liquidity is available too, right? Like if you're
Yeah,
talking about the
yeah,
difference
in
between a
essence.
daily and an hourly and a 5-minute
Yep.
level, like you have a lot more traders with eyes on the daily level.
Yep,
Oh yeah,
exactly.
we spent a lot of time talking about that internal and external language, and I think that's huge. Like understanding taking liquidity inside of inside of a range. So like an internal swing high, that's just grabbing liquidity. That's just eating up orders, whatever. When you really start to accomplish something that make you lean up in your chair is when you're taking that something external. You're taking a swing that is the high or low of one of those. Think of it: 6 hours of market activity. 1/4 of the available trading range for that time, plus or minus. You just swept everyone out of that. Like
Mm-hmm.
that matters, especially if you don't just sweep it, but if you take it and digest it and then continue. It communicates the idea that the work is not done, at least to that point. And so I just, I think, we've gotten off on a lot of strategy tonight, which is really fun for me, but like understanding the swing highs that matter and the ones that don't is huge.
Well, in case there's anybody listening who doesn't understand the difference between the internal and external references that you guys made there, can one of you just kind of explain that a little bit briefly, the idea?
Yeah, banks.
Yeah.
Yeah, so it can be a little bit, subjective on the way that you look at it.
Mm-hmm.
But the way that I would classify it, at least the way I look at it, is when you look at the leg of a move. So like today, the leg of the up move today, we made a new swing low. We started to target highs. So basically, the swing lows that were put in along that move to me are internal swing lows. So yes, they're important, but when we come back and take a spot that's along that move, to me that's more of a internal liquidity grab. So it's not necessarily like a change of structure or a change of trend or anything along those lines. Because a lot of the times we do pull back and we do go make a new high. It didn't happen today, but in essence, there's a lot of times where we come back and after that leg is over, we come back and test something below us and we get a rebid in that area. And a lot of those times we're taking a internal swing low where a lot of stops would be, and then we go and attack the high again.
So it doesn't have anything to do with the sessions necessarily. Like internals are things that are all within the session that you're currently in versus things that happen in other sessions externally.
So I would say that liquidity probably is more important on the leg of the move and not necessarily the session.
Okay.
I do think session liquidity is important, but I think when you're looking at liquidity, it's based on the move, or at least the way I'm talking. So like the most recent swing low to the swing high that we're trying to take.
Mm-hmm.
So like if you're on a bigger picture, if you're looking from where we're at currently, from the high to where we're at, any swing high along the way, like on a 4-hour daily, that's all internal until we take that high,
Mm-hmm.
in essence.
Okay.
So and that's where I said it's a little bit subjective because it depends what time frame you're looking at.
I was just about to say the time frame that you're trading on and doing your planning on and executing on all would carry with them internal and external levels. So a 5-minute swing high off of a 5-minute move that brings you to a new low, that is a form of liquidity. What I think kind of to melt the two together, it's going to be incredibly rare that the swing high of a move is not also like go to a 4-hour chart. The swing high of this 4-hour move down really is that 887.25, 16.5, 87.25. We've now attempted to take that swing high twice. We got to 83.75 and we got to 77.25. Just so happens all three of those levels are now 6-hour session swing highs as well.
Mm-hmm.
So a lot of times those super key spots, they're going to be both.
Gotcha.
They're going to be they're going to be session liquidity, and they're going to be external or liquidity from a leg, especially on a larger time frame. So yeah, and there's a lot more about that in the town hall thing too. If people want to grab that and watch it, it's on YouTube.
Yeah, I'll make sure I link that again.
Yeah.
All right.
Or come hang out with us. Come hang out with us in our room. That's fine too. It's free trial.
DM these
2
guys;
weeks.
they'll explain it to you. They love talking about this stuff.
Or just send us a message. You don't have to join the room.
All right, we should move on to the good, bad, and ugly. I didn't realize the timer was delayed here. I thought we were only 30 minutes into this. We're actually almost an hour.
Yeah, big session. We had a lot to catch up on, man.
Yeah, exactly. All right, so let us talk about the goods, the bads, and the uglies of the week. Who wants to kick us off?
I'll try to be real short and get out of the way. Good or bad from the week. I took a couple stops on Tuesday and traded a little bit in the afternoon. Took Tuesday and Wednesday were kind of meh. They weren't great or whatever. So that's the bad. The ugly was today. It was just the market was ugly. I could have held one trade that I was in before the market all day, or at least to that swing high. I could have also held my second entry, which we stayed above through the next news at 10 a.m. We stayed above the key level. We would have been 3 points maybe below that entry. Could have held that. So that's a little ugly because you look at the unrealized on that. But I'm giving myself a break because it was Friday and the goal was trade, get done. Right.
Also, we talked about that trading around the news. Like, nothing wrong with being protective because, I mean, we've all seen what happens when some of those things get wild.
Yeah, captain slippage comes out, and then you're like, what just happened?
Yeah.
And then the good from the week was I really do think that it's not often that I see progress that I'm like, man, that is really good. I don't know, there has been progress over the last however long. I'm just saying it's not as there was a point where it seemed like every week there was this, especially maybe a year or 2 years ago, like 2 years ago, it was like just conquering the world every week is what my learning and my execution felt like. And like this week was really fun because I had the goal of truly leaning in. And that's my goal for like this whole year is just to just really press in and narrow the gap between the work and the prep work that we do and the execution that I'm able to do in a moment, leaning into that work. And especially the back half of this week, I could like truly say it was like A+ for me, like for closing that gap. It just felt great. I mean, on whatever day, Thursday, to close a trade at like 79, 579, I closed the long and flat for the day and the high of the day. I mean, that's not always going to be the case, but that was in accordance to the work that we did. That was the plan. That's where we want to trade to. And then we'll let them do what they want with that swing high and play all the games they want. So that's my good for the week because it feels great to be like, I have this goal. I've talked about this with you guys on air, off air. I've written about it in my own journals about trading, and to just see that at least come somewhat to fruition a little bit.
Super encouraging.
Feels good. Yeah,
I agree with that. Real quick, just you said bads. You took a couple stops. Were they not good trades, or were they just the stops in general? Because I don't think taking a stop is necessarily a bad thing.
I don't think they weren't bad trades. I think they were coming back from the holidays and kind of like the layoff that from Christmas or whatever.
Mm-hmm.
I just think I was just a little lethargic in my just in the whole thing.
Gotcha.
Like it just took a couple days to like get back up to speed and pick up on the things that there's a micro session accumulation midpoint right there. Like that's a key marker for me. Like just being like fully aware of like everything as it's coming to life when the market's opening. I just think I wasn't as sharp on some of that as and like we saw it, and actually that's the thing. Like Banks called it out in the room and drew attention to the short side opportunity. I think on at least the first day, if I'm not mistaken, and He's like, I mean, man, being below that, like, that's not a good look. Da da da.
Right.
Like, so that was just like, but I didn't move on that, and that's part of our work. So that was the bad. It was just just sloppy.
Yeah, I get that. I'll go ahead and since we kind of already talked about my bad, uh, my good I think was my Tuesday. I felt really good about the way I came back to the week from the long extended layoff. And if you remember, I think I took an extra week off between Christmas and New Year's because I just didn't want to deal with it. But I was patient. I waited for my opportunities, and I really did feel like I was trading without emotions. Like that was the master trader's mindset that Rich talks about. Like I felt like I was pretty close to it, if not in it. The bad, as I'd mentioned, was that Thursday's trading, or at least the start of it. I'm still really pleased with how I managed the last trade of that day. I mean, how can you not be happy when you have your runner gets you 98 points on NQ or
Dude,
MNQ?
let's go.
MNQ, sorry, I should say. But then the ugly, as I kind of alluded to, was my Wednesday overall. Like I let myself get tilted. I overtraded. I took a large drawdown to start the day, like a really large drawdown. And that's kind of the struggle that I've been dealing with. You say I'm on the wrong end of the spectrum where I don't play with the house money, but the problem is the flip side of that is when you take outsized losses compared to like very mediocre winning days, the math does not add up. And so that's something that I have to continue working on and trying to figure out a way to work with those emotions and still be able to take trades even when I've got a little bit of green. And I think that was actually something I did on Tuesday, which I was also proud of. I had one little trade that kind of, got me a little bit, but rather than sitting on my hands and being afraid to put anything else on, I put another trade on and captured another small win. So the day itself wasn't great, but the execution I thought was great.
I think that's legit, man.
Thanks. What about you, man? Do you have any goods or bads this week?
Yeah. I was trying to think of this before we were, hopping on. I'll be honest. I didn't really have a great week. I didn't have a bad week, but I was up like, I don't know, a decent amount on the week, but it's like I had 3 days that I traded. Today I actually took off, which I think is probably a good and a bad. I lost my wallet.
Did you completely lose it, or did you find it?
No, I ended up finding it, and it was like it was at like an hour and a half, 2 hours into the trading day, and I ended up deciding, which was hard, to not trade.
I think that was the right decision.
No, I think it's 100%. And that's what I think. The bad was losing the wallet. The good was deciding not to trade and not to put anything out there. And I talked to Bob about it. I mean, I was contemplating going short at the highs, but and in hindsight, it would have definitely worked out. But I don't know. I just didn't have a good feeling after that whole debacle this morning, which was a shame because that setup was perfect.
But like if you don't trust yourself, like you get to the point where you don't trust your decision-making process, like that's like I'm getting a lot better, I think, at least at recognizing that. Like I could do a lot better at that, but I'm recognizing it now before, the thing says no more trades allowed or order failed.
Yeah, and it was kind of weird this week. I mean, I probably took 5 trades all week. And it was just, and it was a couple $100 on each trade, and it was nothing crazy on a week, but it was very like relaxed, which was kind of the game plan going into the new year, just to not be. I mean, I didn't want to come into the new year swinging, because obviously we got 240 something days left of trading this year. Yeah, so it was a very laid back week. I mean, I didn't really have a good day. But I didn't have a bad day. So, knock on wood, I guess I didn't have a bad per se.
Hey, nobody says you have to have a good, bad, or ugly. It's just a chance to talk about them if you want to.
Yeah.
All right. Well, should we move on then? And do some bold. Should we do some bold predictions and wrap this thing up?
I guess.
Who wants to lead us off then?
I'll lead us off.
Okay. What do you got for us?
My bold prediction is that can I do two? One's kind of funny and one is the actual.
All right, Banks. Sorry, what was your actual?
Okay, so my actual is because I'm her biggest fan and I want her to do the best. My daughter is in competitive gymnastics. She's level I should know this. Level 1 this year. And my bold prediction is that she gets first place at her meet this weekend.
Let's go.
All right. Can we root for her?
Absolutely.
Is there a live stream of this event we could tune in?
She's 6, so no.
Just FaceTime me. Hold the phone up.
So what's the funny prediction then?
So my funny prediction is that the old Baba Yaga actually remembers a news event this week.
Dude, I wore that on Twitter. I wore that in the room. I apologize to Kyle directly for that.
There's no apology needed for me. I was not going to take that trade one way or the other, I don't think.
Again, Mike Ross sends me a message. He's like, he unmuted. He's like, when did you say that news was? I don't see anything here. And I'm like, of course, he's so smart anyways. I'm like, man, Mike Ross to the rescue again. Yes, it's not till 10, not 9:45. I don't know, man.
Hey, it is what it is, man. It is what it is. You know, I felt really good about the reads on that day. I'm happy with that.
Yeah.
Baba, what's your prediction?
All right, bold prediction, man. This was a huge. I really hope I'm right, but it's also super bold. So my son I enjoy as well. The hunting, whitetail deer hunting.
Yeah.
And tomorrow is the last day of the season. It's actually a youth only day.
Mm-hmm.
So I'm taking him tomorrow, especially hopefully the weather holds off and we have a really good little spot that we are going to go to. And my bold prediction is that he kills his very first deer tomorrow. So this is his second season of actually going out a few times. Now he doesn't get to go super often with school and, life and all that. But we went a few times last year. He's 10.
Okay.
Yeah. So yeah,
that'll be his first.
Is it gonna be a buck or a doe?
It's gonna be anything that is brown with 4 legs that is in the whitetail category. He has permission to take Bambi if he wants. Like the property we're hunting is it's private family land, so like it's it's all everything's in whatever he wants to shoot.
Gotcha. I like it. Probably Banks is going to be flying over there this weekend to paint some white on squirrels.
Oh man, I'm going to tell you what, dude.
I've ever seen.
You guys, you'll get some pictures if it happens. He is going to be thrilled. Right, I really hope it works out, man.
All right, my prediction. I'm going to say that the next successful prediction that comes true on our show is going to happen on a week that the winner is not available to record with us.
Well, Kyle, I won't be here next week, so.
Did you know that before the show?
I did not tell him before the show, so
Oh my gosh, it's spooky in here tonight.
I'm just wondering if I can actually win that.
I hope you
do.
No, I mean,
if his daughter wins,
whose prediction comes true first? I guess is the question, right?
Well, we're both going to find out.
His would come true. So. Yeah, his would come true. His would come true, and then you wouldn't be here next week for some emergency, and it'll be me and like Purdue and Joel by ourselves.
Yeah.
Oh, I didn't even think about that.
Yeah. If I make it and my prediction comes true, can I still win? But somebody else's has to come true first. So as long as I guess one of your guys's comes true and you miss it, then I can take it. Well, we'll see. We'll see. All right, folks. I think that's going to do it for today's episode. I got to say thank you, Baba. Thanks for joining me this fine evening. Everybody listening who stuck around to the bitter end. Make sure you show our panelists some love. Check out their links in the show notes. Remember to check out the new combined Discord where you can trade with us during Friday end period. You can listen in live to these recordings. You can discuss strategy and back testing with the best community I've ever been a part of. We will be back soon with another exciting episode. Hopefully as cool as a date night in the igloo, but until...
He'll have to record that outro. He's also going to be really pissed that just happened. Is he even going to join back?
Your son's going to shoot a fox tomorrow or something.
Dude, he'll shoot anything. Coyote, a fox. Because my dad's farm is right there at the property. And, like the foxes, they kill the chickens and the guineas and anything really, any small little of those kind of animals. So my dad was like, I don't care what he kills. Let him shoot anything that moves. Minus the farm animals. So...
This podcast is intended for informational and educational purposes only. It does not constitute financial or investment advice and should not be construed as such. The hosts, guests, and contributors of this podcast are not licensed financial advisors, brokers, or professionals. Any trading or investment decisions made based on the content of this podcast are solely at the listener's discretion and risk. Trading and investing in financial markets carry inherent risks, and past performance is not indicative of future results. Listeners should conduct their own research and seek advice from qualified financial professionals before making any financial decisions. The views, opinions, and information shared in this podcast are those of the individual contributors and do not necessarily reflect the views or policies of the podcast creators or associated organizations.
Produced by China Shop Productions.